Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur and property investor. In today's video we're going to be talking about the Halifax update. House prices are on the move and I want to give you as much update as I possibly can. Now before we get into the video, today I'm actually over in my French house. I've gone away for the Easter, but I don't want that to stop me making up-to-date content. So if it's a little bit shaky, I do apologise. I'm filming myself. I'm in my French kitchen at the moment. I'll show you around the house in a minute. I bought a really exciting addition to this property, a brand new pinball machine, so I'm really pleased with that. The kids love it, the wife loves it, I love it. It's great. So guys, let's get into the video. Let's talk about what's been going on with house prices in the UK. Halifax have just given their new update and I want to give you the information as soon as possible. And I want to give that information to you now. But before that, let's go and get some breakfast. Right, so let's go. As you can see, I'm in the atrium at the moment. I'm just going to leave the property and I will show you a little bit about the French house a bit later on, I think. But right now, I'm hungry. Let's take the beast. Man, no fun with all the kids stuff in here, is it? Look, it's so cramped. I have 4 kids, guys. I don't know if you know that about me. I have 4 kids. I have them from 7 through to 1 year old, so they are very young. Let's go and get some breakfast. All right, man, I forgot my Coke Zeros. I need a Coke Zero for the journey. Oh, while I'm here, want to see the pinball machine? This is so cool. Right, take 2, literally, and hopefully this time, I can have my Coke Zero. That wasn't very artistic, was it, Tom? Should have zoomed in. Should have been like, oh yeah. I don't know what I'm doing, mate. Enjoy editing this footage later. There we go. Let's go. Acceleration. Took a video of a tractor there for you, Tom. Right guys, we've had to come to the next village. Is that open? It looks open. We had to come to the next village because my normal boulangerie is shut. It is France and it's Wednesday, and why not? Why not shut? Oh, sensible enough. I need my wallet. Right, let's go and see if it's open. Looks open to me. Impeccable parking, that. Right. Oh, look at all this. Bonjour. Bonjour. Je voudrais 2 pains de raisin, 2 croissants, 2 pains au chocolat et 2 baguettes aussi, s'il vous plaît. Merci.
Et 2 croissants.
Ah ouais. Merci. You see, my French is not terrible. I can order breakfast. That's about it. And that's it. I am laden with food. I even picked up a couple of extra cookies. Look how beautiful these churches are everywhere you go. Everywhere you go in France. Right, let's take the breakfast back. And then I'm going to eat the food and talk to you exactly about what I'm supposed to be doing on this channel. House prices, what's been going on. They've been going up. Halifax has done their most recent data. Ooh. So let's get back home. Next you'll hear from me, I promise, is going to be on house prices. Let's go, guys. So guys, as promised, let's get into the house price index. Let's talk about this update because it's quite interesting. Now the first takeaway is that monthly change, i.e. house prices month on month, have increased by 0.8%. Now that has led to the quarterly change, quarter on quarter, to shrinking to minus 0.4%. So that shrinkage was much larger, but now it's contracting back and it's looking like we're back into growth because we've got growth this month. Annual change sitting at 1.6%, and the average house price is now £287,880, if I can say that correctly. Now guys, what does this really mean? What it means is we have had this inflection point. We've had this moment where house prices dropped, buyers started to leave the market, sellers started to reduce their prices, offers were being accepted, but now we're back to growth. And that is because a lot of people are thinking that the economy should have been in a recession by now. It absolutely should have been, but it hasn't. And this is the fact, right? It hasn't gone into a recession. Wage growth is still there. Yes, the people that are being squeezed hard, but it is still the story of the haves and have-nots. I mean, over 60% of property in the UK has no mortgage on it. That's a huge percentage, right? These people are completely unaffected on their mortgage payment by these interest rate rises. Inflation is still there. In fact, last month it grew. What do I think is going to happen? I think interest rates are probably going to come down towards the end of this year. I've been saying that since it started. And I think the reason is that as it grows, you're going to see the people that have nots, or the people that are aspiring, or the younger generation, the people that are getting on the housing ladder, being hit so extraordinarily hard compared to those that are not. And that is not going to be acceptable to society. It's not acceptable that the nurses, the doctors, the teachers, all of those people who are in the junior phases of their career can't afford to buy or rent a house. So either property prices have to come down significantly, which I don't see the advantage of really for UK PLC. Why wipe so much wealth off UK PLC, if you like, off the UK company? Why would you take that much asset value and get away from the UK? There's no value in doing that. Much better value in managing inflation, keeping interest rates low. In fact, IMF yesterday said that they expect interest rates to return to pre-COVID low levels within the next 12 to 18 months. Everybody's starting to expect it because everybody knows you can't do it to the younger generation. And because it's not affecting everybody, and the reason that we have inflation isn't, a standard reason. It's because we printed so much money, told everyone to stay at home. That's going to have an effect, right? Like the COVID is going to have an effect. That is going to have to be accepted. But you cannot penalise a generation, the lower generation, the younger generation, for that mistake. I don't believe. So I think it'll be unpalatable. I don't think it's going to be possible. Thinking about my portfolio, I've got about £3.5 million of property. Tom, if you could stick the exact number up on the video, and that means that my net worth as an individual has risen. Well, it hasn't risen by 35 grand because that'd be 1%. But Tom, if you could put the exact number of 0.8%, that'd be great. And that means that I am becoming wealthier. Now, this is the game, guys. It's always been the game. He with the assets wins. Over time, not necessarily over the next year, not necessarily over the next 5 years, but over decades. He who has the most assets wins. And I measure assets in 2 or 3 things if I want to break it down a little bit more. The first one would be property. Properties that you own, properties that you maybe rent out, properties that you live in, all of those will contribute to your net worth. Properties that you live in maybe are a liability. However, they still contribute to your net worth. Now, the second category is businesses that you control and you own. So that would be businesses that are your own private companies, private limited companies. For example, for myself, I own a taxi business. I own shares in a few other companies, but my taxi business turns over millions, and that would be my largest privately owned business. And the last thing would be the real liquid stuff, right? The index funds, stocks and shares. Now, I only invest in index funds because I don't believe I can pick the winners. I know I'm quite happy to get market returns. But he who owns these 3 categories always wins in the long run. Because you have your money nets out, right? Think of it like a fisherman. If you have your money nets out, if you have your nets in the water, you're going to catch more fish. If you have more properties, you're going to get more rent. If you have more companies that you own through index funds, you're going to get more dividends. Now, whatever your starting point is, there might be somebody who started with £1 million or with 100 grand. They had an advantage over me, of course. However, it all comes down to what you can make out of your life and the opportunities that are in front of you. And I'm a big believer in personal responsibility, personal outcome. Anybody can achieve. And what this tells me, what this Halifax update today tells me, is that house prices are continuing to rise because people are continuing to aspire to own. And I think everybody watching this video should aspire to own if you don't already, and if you do, you should aspire to own more. Whether that's property, if you enjoy property and you like property. I love property. I've got this house over in France. In a minute, I'm going to go and show you our next project. In fact, we're kind of done with this bit. I'm going to take you and show you now my next project in this property, okay? One second, let me just turn this camera into a wide angle lens. And the reason I want to show you this is because it highlights one of my biggest thoughts, okay? When you spend money on property, you get the enjoyment, you get the thrill of spending. You know, I enjoy spending as much as the next person, but you retain, or actually, in some cases, increase the value of the asset. So I get the thrill of spending. I love buying index funds. I get to spend money. I love spending money on index funds. And that means I'm investing, right? And I get the thrill of getting the dividend every single month. Now, up here, we have our next project. And this is the attic. As you can see, this is a massive space. And we've started to do some work on it. Look at how big this space is. It's huge. And this is going to become a games room, a bar area out there, and a home cinema room through there. Now this is going to cost, in total, probably 10,000 euros-ish to get done. If I do some of the work myself, if I get contractors to do everything, probably 12,000, 13,000 euros. It's going to add about 20,000 euros to the value of the property. So I make money immediately by doing it, but I get to enjoy it. I'm going to have a pinball machine, an air hockey, I'm going to get a pool table, I'm going to have a full home cinema system, big couch, my kids are going to be there, my family's going to be there. We're going to have a bar or kitchen area through there. We're going to box in the hot water tank. It's going to be amazing. I get to enjoy all of that, but I get to make money at the same time. So guys, anybody watching this, always think about, if you enjoy spending, there's nothing wrong with that at all. I enjoy spending. Spend as much as you want, but spend on things that are going to increase in value over time. If you do that, you're always going to be wealthy. What are your thoughts, guys? Let me know. Hopefully you've enjoyed this slightly more vloggy style video. I'm going to be doing much more of these because I'm off to LA in a week's time, and then I'm off to Dubai 2 weeks after that. So you're going to come with me on that journey. I'm going to keep producing content. It's all going to be on a financial theme, but you're going to get to come and join me on those journeys, and I'll be able to take you through what I'm looking at and what opportunities I'm seeing, because there's always opportunities. So guys, like this video, subscribe if you haven't. We have our subscriber dividend portfolio. That will continue. I'm going to draw that on Saturday, i.e. this video is going to come out on Wednesday, and on Saturday there'll be another video. That one will be the subscriber dividend portfolio. You guys comment on that video, you'll be in with a chance of winning. Subscribe if you haven't already. I think there's going to be quite a good dividend this month. There's about £11,500 in there, so it's starting to rise. But guys, I will see you on the next video. Have a great day. See you soon.